This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending January 15th, 2022. Our question this week is, was there a January effect for the S&P 500 in 2021? The answer will be provided later in the video. This week, the market ended lower. The Dow Jones Industrial Average decreased minus 0.56% on Friday and was down minus 0.88% for the week. The S&P 500 increased 0.08% on Friday but was down minus 0.3% for the week. The Nasdaq increased 0.59% on Friday but was down minus 0.28% for the week. Looking at the week, we can see that there were 9 up finishes versus 6 down finishes for the major indexes. On Monday, the Dow Jones Industrial Average and the S&P 500 were down, while the Nasdaq ended up. On Tuesday and Wednesday, all the major indexes were up. On Thursday, they all ended down. And on Friday, the Dow Jones Industrial Average ended down, while the S&P 500 and the Nasdaq ended up. The new unemployment claims were 230,000 versus 200,000 expected. It was reported that wholesale prices jumped nearly 10% in 2021. Retail sales dropped 1.9% in December. Inflation rose 7% over the past year. The 10-year U.S. Treasury yield pulled back to 1.73% on Wednesday, and Fed Chairman Powell stated that rate hikes and tighter monetary policy will be needed to control inflation. New unemployment claims, wholesale price increases, retail sales drops, an increase in inflation rate, changes in the U.S. 10-year Treasury yield, and Fed Chairman announcements on interest rate hikes are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. Was there a January effect for the S&P 500 in 2021? The January effect is a tendency for the market to increase in January more so than in any other month. The market anomaly is thought to occur because some stocks are sold in December for tax purposes and bought back in January. However, the January effect is more frequent with small capitalization stocks than it is with large capitalization stocks. And many believe that whatever the market does in January, it will do for the rest of the year. That is, if the market goes up in January, it will be up for the year. If the market goes down in January, it will end down for the year. Using the S&P 500 ETF SPY as a proxy for the market, the closing price for SPY on December 31, 2020 was $368.96. The closing price on January 29, 2021, the last day of trading for January 2021, was $365.20. A difference of $3.76, or minus 1.02%. Thus, the market was down for January 2021. There was no January effect for the S&P 500 last year. And whatever happens in January did not hold true either. That is, the market did not follow January lower. SPY gained 27.04% for 2021. So far in January 2022, SPY is down minus 2.16%. Do you think the market will end up or down for January? Or do you believe the January effect will play out for 2022? Or does it not matter to you because you do not own any stocks at all? And if not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. You are going to have to teach yourself if you ever want to learn how to get wealth and income through the stock market. You must RSI, that is, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you how to be a worker. They did not teach you how to be an investor. And they taught you nothing about the U.S. financial system. You can learn how to be an investor if you simply start reading books about investing, books that you can borrow from the library or buy cheaply online. It is not difficult to learn how to be a passive investor, which is how most people should start. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at SouthsideSchoolOfFinancialFreedom.com. Here is my trading watch list for the week ending January 15th, 2022. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was Wynn Resorts Limited, ticker symbol WYNN. It's in the second column. It increased 8.18% for the week and was up 8.6% on Friday. Wynn Resorts Limited designs, develops, and operates integrated resorts, which include hotels and casinos in Las Vegas and Macau. Looking at a summary of results, you can see that Wynn has increased more than 7.5% year to date. I did not trade Wynn this week, but I have traded it in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio is not outperforming the S&P 500 index ETF SPY so far in 2022. The Southside portfolio is down minus 8.41% versus minus 2.16% down for SPY, a difference of 6.25%. The Southside is losing to SPY by 6.25%. The primary reason the portfolio is losing is that the Southside is heavily invested in Bitcoin, and Bitcoin continues to be in a bear market. Will it rise in 2022? Stay tuned to find out what happens to Bitcoin and the Southside portfolio. The portfolio will remain heavily invested in Bitcoin. The portfolio is 80.66% in a Bitcoin trust. Equities, including puts, calls, and ETF, make up 18.62% of the portfolio. Cash is 0.72%. The cash flow generated for this week was 0.42% of the portfolio account value. The account value changed by 1.17%. Meanwhile, the S&P 500 ETF SPY changed by minus 0.29%. I sold option contracts on one position this week. They were calls that range from $0.00 to $353.40. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. Check out past videos for other questions of the week. They are listed in the description section. Please like, share, and subscribe.